difficult.
And so when we talk about non-financial information or extra financial information, we are talking about enhanced analytics. And the investment discipline does evolve, and it does change, and it does get better based on higher consciousness. So as a manager, I can do my best to help our analysts systematically, it's right where we started, go down these avenues of inquiry and get better insight for our investment clients.
Question there.
Hi, this is Daniela from Belgium. You've talked about reporting. I was wondering if you could focus a bit more on targets, reporting on targets and integrating this into the strategies of companies.
Who would like to talk about that?
I mean,
Suzanne?
I can speak to targets. We have been setting targets for many years in each of these areas. And as we've been driving this process of integrated reporting, we also integrate our target setting. So we set our long-term targets for environmental and social performance in the same way as we set targets for financial performance. Having said that, we also would like to retain a certain element of time-boundness for some of these targets. So some of them would say by 2014 or by 2020 we will have done such and such, whereas financial targets are more kind of rolling targets. And the way we set the targets is that we link it to the business planning process and to the forecasting that we do for our business plans, so that we think about how would investment decisions for expanding the production, how would that impact environmental performance? How would the patient target that I referred to, how would that relate to sales projections in the business? So that's a pretty robust process by now.
I think you've got the microphone.
Matt Prescott, the Environmental Rating Agency. I was interested in the example of the peacock's tail, which is a seeming extravagance, but turns out to be sort of fundamental to reproductive success for the peacock. What do you think will be the key drivers for businesses integrating the seeming extravagance of sustainability reporting into their business models? Will it be price or competition or innovation or something else?
I would like to see competition coming more to the fore. And I think this is actually where, I mean, Erica mentioned Professor Porter. And I think we may agree or disagree with the views that he's putting forward. But I think where he's actually doing our business a big favor is by emphasizing the competitiveness in how you run your business in a responsible way. Because the way I see it, responsible business is not going to be a competitive parameter. We're way beyond that. That is going to be what is expected of companies. But if you can find ways where you can actually do your business smarter, whether it's operational excellence, as I mean, Annette was challenging our carbon targets and carbon ambitions, but still it is actually feeding into operational excellence. And that is a way of competing. And then on top of the competition, there's actually a space where companies can also explore ways of shaping the agenda, setting new or walking down new avenues. And this is where companies can take a more systemic approach to addressing some of the societal challenges. That is where the real competition is going. So I think competition is going to be a driver, and it's about finding new ways of competing in new dimensions of business performance.
Annette, what about?
Yeah, I think I agree to Susanne to a large extent. I would say that actually right now we just a few months ago we did win some new business just because we were a responsible operator compared to our competitors. So it's still not a hygiene factor, although it would be nice, but I agree eventually it will be. I think on a lot of different parameters will be drivers for this. I think building resilience is one key thing. And also a simple thing, which is not so simple in reality, is getting access to the raw materials that are important to your company. So when we are building 20 new enormous large ships, the world's largest ships that are going to be built are coming onto the seas, 10 of them this year, the next 10 next year. They will be 95% cradle-to-cradle certified. And that's because...
And what does that mean?
That means that 95% of the material that is going into to building the vessels will be can be recycled and are well known in their origins and so on. And this is important because we're going to need steel. We will run out of steel. That means that the price on steel will go up, and we will continue both on our vessels and for our oil rigs need enormous amounts of steel. So we need to have those kinds of policies and programs to get access to the raw materials that we need.
Thank you. I think I see the microphone's moved over there. If anybody wants to ask a question, can you put your hands up so we can see? I don't want to miss anybody, but it's your...
Hi there, Bruno Basti from Hermes Fund Managers. I was going to ask a question to the entire panel in terms of the frequency of reporting, and if you think that quarterly reporting is obsolete to report on environmental, social, and governance issues that will potentially impact the company in 5, 10 years, 15 years' time, as opposed to just the next quarter.
Sorry, so it's a question about whether quarterly reporting is obsolete and how often you should be reporting on the environmental factors. Is that what you're saying?
That's right. If the current way of reporting by quarter is appropriate and adequate to report on ESG. Thank you.
Annette, quarterly reporting?
I think it might be useful. Quarterly reporting might be useful if we got better at it. If we found the factors that were relevant to report on a quarterly basis, but I don't see them right now. But maybe there are other suggestions from the panel. I think what's probably more important is the short-termism versus the long-termism in your question. And I think in terms of financial quarterly reporting, that is unfortunately impeding to some extent the long-term thinking, and that's really the opposite of what we want.
Paul?
I see the figures as quite a slow-moving constitution. So the idea of quarterly or half-yearly reporting wouldn't be of great use value to us as the numbers currently stand. Most of the interest for us is around the voting season, without a doubt. This is going to be our second year of doing this, and we reach a peak of activity prior to that when we're trying to pull together a company's story for the last 12 months. And that will include a quarterly report and a half-yearly report, but it doesn't include the individual reports as they are released in a timely fashion. So it doesn't really help us where we are right now.
Suzanne?
Well, I think it depends very much on the type of business you're in. I'm aware, as I'm sure everybody else is in this room, that there are some really high-profile CEOs who've been out saying that we will no longer do quarterly reporting. I would actually be worried if we let go of quarterly reporting. At least in our case, the fact that we revisit our business performance 4 times a year and not just once a year. So we've actually been doing the reverse. We've been introducing quarterly reporting for our sustainability performance metrics, even if that is very difficult to trend on a quarterly basis. But it's a way of checking on a more regular basis the shape and the health of your performance.
Does that, by the way, have any impact on the share price, quarterly reporting of sustainability metrics? Is it a matter of interest? I mean, the financial quarterly reports do, but I mean...
We haven't been able to see that. I wouldn't argue that. That would be a stretch.
But it's just a question of keeping it in mind all the time.
It's a matter of keeping it in mind, because if you only see it once a year and you say, oops, that doesn't look too good, then it's too late to do anything about it.
Yes. Erica, what's your...
I was just going to say it's notable to look at the volume of trading around quarterly earnings periods in the market, notwithstanding the performance of the stock, but the volumes ramp around quarterly results. I just think that's interesting, and I think that when it comes to a company's articulation of its values and priorities, and I think when you hear people like the former CEO of BHP saying it was the happiest day of his life when they stopped doing quarterly reporting, and when you think about Unilever and Paul Pullman, knowing that, you know, if you're all about the quarterly reports, like, don't buy, you know, my company. And if you think about the introduction of ideas like loyalty shares or, you know, warrants for longer term owners, I think this is all very interesting. So from the standpoint of, again, the time frame, the debate about short-termism versus long-termism, I think it's really important to think about.
Thanks for that. We are very nearly out of time, but I could take one more question if anybody wants to. You've had a go. Sarah behind you.
Thank you very much, Sarah Wilson from Manifest. It's a question for Suzanne and also Annette. It's a two-part question. Firstly, as organisations committed to sustainability, does that actually flow through to your pension arrangements for your employees? And secondly, will you consider giving your shareholders a say on sustainability as you give them a say on the financial accounts and on remuneration? It would be great to see you actually putting your sustainability report to the vote at the annual general meeting.
Another vote on which advice may be proffered. Annette, I couldn't resist that, sorry.
Sorry, that's very interesting. We're nowhere near that yet, neither with the pensions nor the vote. Maybe Novo Nordisk is slightly closer. We hope to give people a say in other ways, and we have dialogues. Not just with investors, but with all types of stakeholders. And but it's not a democratic organization as such. And my particular company is in the situation that we are foundation-owned to a large extent, family-owned company, so it's a little different in that sense. But it'd be interesting to hear other views on that.
Well, I think we're also owned by a foundation that controls a portion of the shares, a controlling portion of the shares, but not all of the shares. So we do put this up for votes. We do not put our sustainability report up for vote because we don't have one. So we put our annual report up for the formal vote at the annual general meeting, which is on Wednesday this week. So the shareholders can actually acclaim or make their comments about the report, and they do to a large extent. We also put to a vote back in 2004 some changes to our Articles of Association in which we specify that the way we will do business is by striving to be financially, environmentally, and socially responsible. So that was also put to the vote of the shareholders. In terms of our pension fund, we've had these questions on a regular basis, and I would say, being here in the UK, the Danish system is somewhat different because we don't have our own investment or our own pension fund. So we entrust the pension funds of our employees with a separate pension company, and they would have policies that would be similar to, and actually they also subscribe to the PRI. So they do have investments that are following these principles, but we do not, as such, control how they make those investments.
There we are. I'm afraid we have run out of time. I want to thank you for being a great panel to moderate, I mean, it's been a really interesting conversation. It's very, very difficult to sum it up, but just one or two thoughts to leave people with. First of all, it is about substance and what it means for the company, not form. Secondly, materiality really matters, and it's quite difficult to get it right. Thirdly, standardization will help because it means comparability. And this is a way, if done right, for companies to differentiate themselves. And what I like most is the remark, I think it was Erica, about new avenues of inquiry. We could always be doing with those. Thank you, panel, and if you could thank the panel in the usual way.